David Burrows is here from Barometer. We're talking today about North American large caps. Peter in Toronto, hello.
Hello.
Welcome.
Thank you. Good afternoon, gentlemen.
Hi, Peter.
Mr. Burrows, I'd like to inquire about Teva Pharmaceutical. As you know, it's the largest generic company in the world, and they bought a large division from Allergan PLC last winter, just at the end of the year. And I understand they're paying out something like $3 to $4 billion for it. While the stock is down about 40% now, and I know they're selling off assets, to pay for it. And their last quarter, their earnings were down. But is this all a matter of them absorbing the cost of the division?
Right.
Or is there something else going on here?
Thank you, Peter.
So, Peter, great question. They've now had 4 quarters of earnings declines, and it may well be that there's some benefit that comes out of restructuring. Obviously, they when they buy something like Allergan, they're hoping that they can cut out some costs and do well with marketing the products. At this point, there is no evidence that that's happening yet. The stock is not behaving well. It's in a sector that's a little bit tough. I think that there's companies that I would focus on where things are going better today, where there's real evidence. Mm-hmm. You're not going to have in a bull market many investors step up and buy something that in the short run looks broken. So I think I'd be a little careful and I'd look at something else.
Thank you, Peter, for that. From Toronto, Port Elgin now for Murray. Hi, Murray.
Yes, hi, Michael. I had a question about, I had equal positions in Agrium and Potash prior to their announced merger. I wanted to get the opinion on short-term and post-merger on both companies, or the combined company.
Okay.
Thank you.
Thank you.
So Murray, just quickly, these stocks have gone through a pretty good basing period and technically have broken out. I think that they are certainly more constructive. I think that you could probably own either of them. Again, there's lots of things doing well, so I wouldn't be too focused in the group. I prefer Agrium to Potash. You have a little bit broader base. Ultimately, they're both going to trade sort of in line with one another. They both pulled back in the last couple of days. Probably gives you an entry point because they certainly haven't broken down.
Does your thesis on Agrium, though, fall apart post-merger, considering Agrium is there? You like it because it's got the diversification. It'll be less so under Potash.
Yeah, it certainly will be less so. I guess my point is you could own either of them. Mm-hmm. I don't think you want to be overly focused in this group. It's a position in a very strong market.
Thanks, Murray, for that from Port Elgin. The last word to Chris in Fredericton. Hello, Chris.
Hello, gentlemen. Martin Ray, for 1 year to 18 months. What do you think? Could I have the dividend and the street's consensus? Thank you very much.
All right.
So this is a 1.4% dividend. When I look at it, the stock's getting a little better. Auto sector's improving. I'm going to tell you, look at GM, right? 4% yield. The dividend will grow 20% a year over the next 3-4 years. They're paying out 25% of earnings. I would prefer to own a GM than one of the parts companies. I think this looks tremendous technically.
I see MRE is trading 6 times forward earnings, but so is General Motors for that matter.
Yeah, this is a cheap group. People have assumed the cycle's over. The U.S. economy is reaccelerating. General Motors, I think, for a dividend investor, looks like a gift.
Okay, so Chris, here's the deal. The street consensus on Martin Rea is $11.11 or so. That suggests 29% total return. GM in New York, under the ticker symbol GM, street consensus is $36 or so, suggesting that it's already fully valued.
Yeah,
you disagree?
I don't buy it. The estimates are going to go higher on GM. And for those that are looking for something that can fight rising interest rates to generate income, this type of company can do it.
Chris, thanks for the call. And thank you for the calls, the emails, as well as the tweets. We're taking a brief break. But when we come back, we're going to look at the top picks.